Prakash Diwan, Head of Institutional Client Group with Ashit C. Mehta joins us. Prakash, morning. Thank you for joining us. Prakash, what do you want to start with what's happening in Europe? Why Facebook IPO failed, or why brokerages have a contra bet on Tata Steel?
I think I'll stick to a simpler option, and that's the Tata Steel part. We understand the company, there's enough available triggers to kind of take a decision. I think Europe and US markets, as if Facebook were to be a representation, very clearly are indicating a risk off mood that still prevails, that doggedly continues to prevail in fact. And the only thing that could change for us on the positive side is the kind of numbers that we've seen. Most of the numbers, including Tata Steel, have really not been disappointing at all. And Q4 was supposed to be, mind you, one of the toughest quarters that we anticipated. And if companies were to clock these kind of numbers going forward, the belt tightening is only going to help them in terms of improving earnings, while the indices actually don't factor that in. So you already have on a trailing basis the Sensex available at about 14.5, forward basis about 12.5, which is really not something that I would be worried of if I were to invest today at these levels. So in all, it's getting to be an investor's market, a smart investor's market, but well, people do need some sort of an encouragement to trigger off that buying decision, but otherwise definitely things are looking fairly decent enough to buy into.
Prakash, what about banks? I mean, SBI did well on all counts, but can we expect the stock as well to show that kind of a performance?
In fact, I guess the worry on SBI is the Q4 numbers that they managed definitely are spectacular, but is that like, one-off thing? Is it going to continue? If you ask me, it's going to be very tough to continue this kind of a stellar performance from a base that's very different this time around. So I wouldn't want to buy into SBI with that kind of a gusto, but yes, at least things aren't so bad, and the valuations which we had kind of seen in recent times were fairly unreasonable, to be fair to the stock. There's no need to hammer these banking stocks down so much. Of course, we've also seen the Finance Ministry talk about corporate restructuring to be taken much more seriously, because they don't want probably a spate of windowed balance sheets coming through and everybody clocking some fantastic looking numbers, whereas the reality is very different. So I would wait and watch for another quarter or two before taking a very long-term call. But yes, things could probably be much better than earlier for banks here on.
Prakash, do you think State Bank of India numbers could be a lead indicator of what we should expect from the banking pack, at least in coming quarters?
Yeah, as I said earlier, the whole thing is whether what SBI has done, is it possible for some of the other larger banks to continue doing? In fact, some of them could take cues and replicate a lot of those good things that SBI has tried to do this time around. If you look at PNB, has probably not made that kind of an effort, or a Bank of Baroda. So some of these larger balance sheets could distinctly go the same way, and that's exactly where we are seeing some value, because these stocks have been beaten down for, as I said, unreasonable levels. But any kind of a move to go the SBI way, which is viable, I'm not saying it's impossible at all, distinctly could improve things for them.
Okay, Tata Motors. Tata Motors is now down by about 12.5% in last 5 days. It is still up about 13% based on 1 year price change. But in quick time, Tata Motors has retreated from levels of about 330 to 260. Prakash, what has spooked Tata Motors?
I think, it's Murphy's Law. I mean, if you feel the going is good, don't worry, it's going to come to an end, is what people expect. So Tata Motors has had a dream run in spite of, everything else kind of falling around itself like 9 pins. And this stock is rock steady, keeps on, towering out of that mess. But somewhere people expected it to kind of take a pause, or probably, that dream run to come to an end. And the moment they got the April numbers as a trigger, people started reacting to it. But, if you look at historically, April has always been a weak month on those, the sales for JLR at least, if that were to be a trend that we could discern out of. And Tata Motors possibly has taken a pause, but not an end, or it's not a reversal that we are expecting. So I think it's an overreaction. People will start kind of anticipating better days ahead for Tata Motors, and it could probably start offering much better value than what it did at 315, 318.
At these levels, given the way how crude prices have corrected, are you a bull on airline stocks?
You know, apart from fuel prices, I think there are much more specific issues to our companies, so Indian companies in the airline space, which actually don't probably give me the courage to give them a separate or a higher rating than what they've been prevailing at. The only stock where the fuel prices, if they continue to be soft, and that's what we're expecting, could be Jet Airways. So that's the only story that probably is on track. Otherwise, the other guys have so many issues that even fuel prices impact, a positive impact of fuel prices gets negated. So I really don't want to kind of put my money into something that's still sounding very iffy. But Jet Airways is the only stock that I would correlate with that inverse correlation on the fuel prices.
What are your thoughts on HDFC at 635 rupees? If I look at the 1 year performance, HDFC has been flat.
Yeah, I mean, at this point in time, we've seen it lose all the value that it had generated on the price. The price action has brought it down to a level that distinctly looks flat. But mind you, there's been a significant change of hands in terms of the stake that HDFC, some of the key investors in HDFC had, and after absorbing all of that supply, it still has been holding on. And the MSCI correction or change would possibly be more technical in nature, anticipating the kind of ETF outflows that people would have factored in. But my sense is, given the robustness of the business model that they've always pursued, and the fact that we are now sitting on an interest rate cycle that's looking downwards, I think HDFC is distinctly a great buy on the portfolio. It will offer that resilience, possibly looks flat at this point, but distinctly would give you that upside once markets start looking up or perking up a bit.
What are your top ideas for FY13? Where are you recommending your clients that they should put their money to work?
We distinctly continue being overweight on financials, particularly non-banking financials. We've upgraded some of our targets for the likes of M&M Financial Services, IDFC. We distinctly believe the infrastructure and interest rate play benefits these companies the most. Amongst the banks, of course, we continue to recommend the top 4 banks, which includes ICICI, Axis, SBI and HDFC. The other pocket that we have started looking at very actively was auto ancillaries. I mean, this was a while back, but it hasn't yet started showing results. But we believe that that's another pack that could probably seek some very new valuation. So slightly small in terms of market cap and hence probably more vulnerable at this point in time. But that's where the genuine stock picking would start happening. And of course, we continue to be positive on fertilizers as well. So from a theme perspective, these are broad themes that we're pursuing. We're not looking at too much of contrarian play. The only new element of contrary outlook is coming through Reliance. We've started recommending Reliance at sub 700 levels, and we believe that could probably be a surprise outperformer for the markets going forward.